Hey guys, good morning and welcome to the first ever Camp Financial podcast and YouTube series. So to just kind of put a little bit out there what this will be. So my goal is to do somewhere between 10 and 15 minute videos daily, just kind of a market recap as well as some other personal finance things that you may find interesting or helpful. At least I do, and that's why I'm going to bring them out. But yeah, so that is it for the intro. I guess what makes me qualified. So I have a long history of doing my own investing in the stock market and recently passed my Series 65. So I can work as a money manager or a financial advisor for independent, to be a independently registered rep, or registered advisor. So with that said, let's get started. So the first thing I want to talk about really is more of the personal finance thing. And it was interesting. I read a story. So I'm looking at my notes over here. The Wall Street, it was Wake Up to Money from BBC had run something, it was probably about a week, maybe 2 weeks ago, about online banking and how more than 2/3 of people use online banking, whether that be through an app on their phone, whether it be accessing the website, etc. But the majority of people now are paying their bills online and not sending checks in any longer. One of the things that they highlighted was not to make a mistake when you're entering your account numbers, mainly just account numbers and routing numbers. If the naming and convention is off, it doesn't really matter. Whatever the account numbers are and routing numbers are, that's who the money's going to get sent to. So please make sure that when you're paying your bills online that you double check the accuracy of all of your account and routing numbers. I can tell you from experience that I'm in the boat of one of those people. It says it's a very minimal percentage, but I'm in the boat of one of those people that have accidentally sent money to the wrong company. It was another one of my bills, but on my bill pay on my banking website, I selected the one of the student loan bills that we're finishing paying off, and I went to make a payment on it, and I paid the same amount that I usually pay toward my mortgage. So not a big deal, I guess, since the money was there to be able to handle it. But if that major difference in payment, if I didn't have the extra money sitting in the account, then we would have been in trouble for that month to wait and catch back up to the mortgage. So, all right, well, with the personal finance piece out of it, I want to go to, I guess, what happened in the stock market yesterday. So obviously the Brexit fears have kind of allayed. Looks like people, obviously the market reacted yesterday that they're not as concerned about Brexit now. Looks like it's not going to happen. And, so the stock market rallied pretty much across the border, or across the board. If you look at the S&P 500, so I didn't pull up the whole percentage that the S&P 500 went up yesterday, but I just want to look at kind of within the S&P 500 what happened. So out of the top 20 stocks in the S&P 500 yesterday, the top performing stocks, 9 of them were material stocks. 5 independent oil and gas companies, a couple oil refineries, and then 1 copper company. So obviously the materials were driving yesterday, and that was pretty much highlighted due to the Marathon Oil acquisition that went through. Obviously their stock jumped 10% yesterday. And like I said, so out of those stocks, you're looking at the top 3 were all independent oil and gas. That's Marathon, Southwestern Energy, Murphy Oil, Delphi Automotive, and the CBRE Group. The financial, and Delphi Automotive obviously is an auto parts company. So that's your 5 that kind of drove the S&P yesterday. We'll look at the top 5, I guess, laggards or laggards. Let me get that pulled up real quick. And those 5 companies were mainly service companies: Alliance Data Systems, Wynn Resorts, Indo International, the healthcare drug manufacturer, Baker Hughes, which is interesting that Baker Hughes would be there as an oil and gas equipment and servicing company. So we may need to take a look a little deeper into that just to kind of see, what's going on there. And then H&R Block, obviously again another service company, the tax business. So those were your S&P 500 drivers and laggards. Let's pull up the Dow real quick to take a look at their top stocks yesterday. Okay, we'll start at the bottom here. We'll go from the laggards to the leaders. The laggards were Cisco Systems, Apple, Microsoft, P&G, and Verizon Communications, which all of those I found pretty interesting. Obviously every company in the Dow, they're big time companies, so it's a little harder to tell why some of them might have went down, but they were all basically flat. Even Cisco being the biggest laggard, the lowest gainer of the Dow, it only dropped about 0.6 of a point. So the 5 drivers were Boeing, Goldman Sachs, 3M, Intel, and Nike. I'm guessing Nike probably got a pretty nice pop from the Sunday night win by the Cavs in the NBA championships. So there's a little rundown of the indexes from yesterday. And now I want to jump into, I read something yesterday about Patriot National, and a guy was asking whether he should hold Patriot National until the purchase, because they're being bought out. So right now it's trading at $8.63. In my opinion, I think if I was looking at it to put into my portfolio, as long as I could get it at a pretty good discount, which it is trading at right now, depending on the hold time, I would consider buying it. So it's at $8.63. They got a buyout bid at $9.50. I have to take, I'm gonna have to take a little more time to research to figure out what the split is. Is it $9.50? What percent is it in cash? What percentage is in stock in the acquiring company? And that sort of thing. Because you may not want to own stock in the acquiring company. There may be something there that you see that you're not comfortable with. So if it was all in cash, obviously the spread would be a lot tighter. You know, it wouldn't be trading at $8.63 with a $9.50 buyout. So I will get back to that one, you know, do a little more research and figure out what is you know, what may be the right price to buy Patriot National and hold on. But if you're interested in buying stock in the new company, or getting stock in the new company, you know, it's trading at a 10% discount basically to their buyout offer. So, you know, you can pick up as many shares as you want and pick up a 10% gain pretty quickly. The other one that I wanted to talk about was, you know, Jim Cramer talked, I think it was not last Friday, but the Friday before, about SeaWorld possibly feeling some pain from the Disney movie Finding Dory coming out, you know, and it being about aquatic animals being held in captivity. And I definitely think that he's on to something there. I think that SeaWorld could continue to see pain. But the other side of that is I took a look at SeaWorld's financials, and they're bringing in a significant amount of cash. You know, it may be, you know, it may be that the stock does go down, you know, or the stock may go up, but they are bringing, like I said, they're bringing in a fair amount of cash. Can easily cover the dividend that they're paying. So what I did last week, you know, after hearing that, watching, you know, looking at the chart and seeing, obviously, you know, it's been below the 50-day moving average since probably about mid-April, and so in that time it's dropped from $20.50 to $15.30. So obviously it's down, you know, 25-30%. But like I said, looking at the financials, everything looks pretty stable. So I took the opportunity of seeing it down here, taking a look at it, because I wouldn't have looked at it had I not heard other people talking about it. I took a look at it and said, well, with their financial positioning, I'm willing to buy in at $14 a share, which is basically going to give me a 6% dividend. So I sold a put option this last week for 50 cents. That if the stock would get down to $14, that I would buy it. And so that's going to put me in at a $13.50 buy-in price, which is going to give me just about a 6% yield on, you know, on that stock as they pay dividends going forward. So something to consider. I mean, obviously there's plenty of different ways that you can play every type of investment, whether you're, you know, going long, going short, you know, you go long and you cover with a call, or you sell short and make the, or you sell a put option and you make the income off of it, you know, knowing that if the stock gets down to a certain price, then it's gonna be forced on you, and so you pick it up at that level. So there's plenty of ways to play and do different things in this market. So my advice would be to find what works for you, or to find a financial advisor, somebody that can help you create a plan that's going to create more wealth for you going forward. So if you have any questions, feel free to leave them in the comment section. You can always find me on Twitter at @cmelik, or on Facebook. It'll be under Camp Financial I don't think it's .net, but that'll be the website when we get it put up. So take care.